Assalamu alaikum and welcome to the special edition of the Oasis Focus and Finance Show. I'm your host, Shafiq Morton. As always, it's great to be with you. In today's show, we're going to be having a look at successful investing. What is a successful investor and what sort of characteristics do they have that put them above the rest in terms of going on the path towards financial freedom? Joining us in studio today are Masud, Harneker, and Sherazaan Isaac. So, ladies and gentlemen, assalamu alaikum.
Wa alaikum salam.
Sherazaan, let's start off with you. What are the essential characteristics of what we would call a successful as opposed to an unsuccessful investor?
Well, Shafiq, if we look at an average person or average investor, this is someone they use their money and they save the rest of it. But if we look at what is a successful investor, it's someone that's going to be saving their money first and then using the rest. And if we look at the attributes associated towards what makes this investor successful, we're looking at things like someone that is going to be planning. Like we said, there's a saying which a lot of us know: if you fail to plan, you plan to fail, which goes with coupled in having a budget, speaking to someone, which takes us to another factor or attribute associated with a successful investor, is educating yourself. Alhamdulillah, we're in the month of Ramadan, and we know that one of the most amazing principles that we associate Islam with is reading. Iqra, read, gain the knowledge, gain the experience, gain the education. And it's easy to do this because you can read, there's lots of material out there. But more importantly, if you don't know where to start, you can contact an accredited financial advisor in order to do so. So it's planning, educating yourself. Another attribute, Shafiq, is having patience. We know, for example, for the mothers that is listening or watching us today, if you put a cake in the oven and you take it out an hour before you're supposed to, what happens? It's going to flop.
Flat, yeah.
Yes, it's going to flop. So similarly with investing, a successful investor understands the long-term benefits of investing over the long term. So we mentioned educating yourself, having a plan, having patience, and also importantly, separating your needs from your wants. We all know that even in Ramadan, you go to the shops, and I often encourage our investors or even relatives to have a shopping list. Because if you're going to do aisle shopping, you're going to end up buying things that you don't need. So you need to have discipline. And alhamdulillah, this is what this blessed month teaches us, is to have self-discipline. Be aware of what you want and what you need. And yes, those are just a couple of the attributes that a successful investor would have.
Now, Masud, we've heard about planning. What other characteristics can we look at in terms of being a successful investor?
Shafiq, well, a lot of time is focused on looking at the return that an investment will provide. The two most important factors that will determine your financial plan would be how much you contribute and how often you contribute towards your investment plan. There's a wonderful concept of compounding and effectively earning returns on your returns. So the earlier you start saving, the more likely you are of achieving your long-term financial goals. Shafiq, over time, studies have shown that the single most important change that a millennial can make to improve their retirement outlook would be to increase their savings towards their investment plan. For a worker moving closer to retirement, it would be a combination of delaying retirement and increasing their savings if they haven't saved enough at that stage of their life to have a comfortable retirement. So the key question here, Shafiq, is how much should you be saving towards your retirement in order to maintain that standard of living when you reach that stage of your life? As a rule of thumb, Shafiq, we would like to tell investors that they should be saving at least 15% of their annual income towards your retirement product. This would also include your employer contributions, and this would also have additional tax benefits. But as I mentioned, as a rule of thumb, it doesn't take into account an individual's specific circumstances. So what you should be doing, Shafiq, you should take the time to calculate what the optimum contribution to your retirement would be for you specifically. And the assistance of a qualified professional financial advisor can help you do this to ensure that the contributions that you're making can match your retirement goals. So the key takeaway here, Shafiq, is that many successful investors focus on what they can control, There are certain things that you can't control. For example, what's happening in the markets, you can't control that. But what you can control is how much you are contributing towards your retirement fund. Many successful savers, Shafiq, have adopted an approach whereby they start saving early and they start saving consistently over long periods of time in order to ensure that they're achieving their long-term financial goals.
Sherazaan, what happens to investors? I mean, investments fluctuate. I mean, the graph always seems to look like a drunken worm. So how do we get our way around that?
So I touched on it a bit early, Shafiq, sabr. That important word called patience. When markets are fluctuating, you as an investor need to be mindful about your initial investment objective. And in life, when things don't go the way you want it to go, you're not just going to pull out of the race. You're not just going to give up, but you're going to stick it through. So I encourage investors, and this is exactly what successful investors are doing. They're going back to, why did I initially go into that portfolio? What was my initial investment objective? And also coupled with that, Shafiq, investors need to ask themselves, what is the company that I'm investing with? What makes that company successful? Alhamdulillah, at Oasis, our executives have pioneered amazing portfolios based on an ethical investment philosophy. So you're going to be looking at those types of objectives of that company. And that needs to be incorporated, like at Oasis, it's incorporated in our investment management, in our service delivery, and even in our public benefit activities that we participate in.
Masud, anything to add to that? We've heard about, I think they call it ESG, ethical investing in environment, social and governance.
Yes, Shafiq, ethical investing and socially responsible investing forms a key part of our investment process. But Shafiq, there's also an old adage that goes, there's no such thing as a free lunch when it comes to investing, which basically means that if an investor is looking for an increased potential rate of return, they would have to accept a higher level of risk. However, diversification can improve your outcomes when it comes to a trade-off between risk and return. Shafiq, diversification, simply put, is spreading your risk over a number of asset classes. So not putting all your eggs into one basket. So when you have a number of asset classes within your portfolio and a specific asset class doesn't perform over a given period of time, asset classes that are not correlated, you can use as a buffer and reduce your overall risk profile within your portfolio. So many successful investors know that diversification is key to managing and controlling the level of risk within your portfolio. For example, if you consider the range of balanced funds that we have within our product offering, it has a combination of asset classes which would include equities, underlying securities in property and fixed income. Over periods of time where equity markets have been relatively volatile, what we have noticed is that our balanced funds have provided more stable rate of return. For example, the Oasis Crescent Balanced Progressive Fund of Funds, which invest in a broad range of underlying securities to provide significant diversification within the ethical parameters of Sharia compliance. And this fund has provided investors with an annualized return of around 8.8% since inception in 2005. The fund is very well positioned from an asset allocation perspective, with 42% of the fund invested in South African equities, 21% of the fund invested in global equities, 19% invested in property, and another 18% invested in income-earning assets. In addition to this, Shafiq, the level of risk per unit of return is particularly low when measured by the Sharpe and Sortino ratios.
Masud, before the break, you were talking about the importance of diversification, not putting all our eggs in the same basket. Let's get back into the basket.
Shafiq, so going back to the example that we discussed prior to the break on the Oasis Crescent Balanced Progressive Fund of Funds, if we look at the outperformance of the fund relative to the real rate of return after taking into account the effects of inflation, we can see from the figure illustrated on the screen of how diversification can provide an investor with a free lunch. Although it will not maximize the gains that may arise in a rising stock market environment, it will nevertheless capture a substantial portion of the gains over a long period of time, but more importantly with less volatility than an alternative investment portfolio that would only include stocks. This reduction in the overall risk will provide investors with less volatility, which would make it easier for investors to stay invested in the market for a longer period of time and stay invested through the investment cycle. There's another adage that you might know of. It's not about timing the market, it's about the time spent in the market. And that's the philosophy that we would like to promote with all our investors. Shafiq, the last point that I would make on diversification is that there's various ways that you can diversify within a portfolio. At Oasis, we diversify across different regions. So, for example, if you look at the developed markets around the world, like the US, for example, then we would also diversify across different asset classes. So, as we discussed earlier, your equities, your properties, your income. Then we would also look at, within the geographic space, the different currencies at play, like the rand, the dollar, the British pound, for example. And then we'll also look at different sectors, like the healthcare sector, like the communication sector, like the information technology sector. We know there's a real drive with the fourth industrial revolution, and there's increased data usage, so that's another sector or theme that we like to play. Then we'd also diversify across different instruments. So there's various ways and means of how you can diversify within your portfolio. At Oasis, we diversify across these multiple dimensions to ensure the level of risk within our balanced funds is reduced.
Now, you've touched on the long-term rates of returns, especially if we stay in the market. As you say, it's how much time you spend in the market. So ultimately, how do we assess our returns on these long-term investments?
Shafiq, many successful investors will look at after-tax returns or even after-tax real returns, taking into account the effects of inflation. Tax is a very important component when assessing your overall return. Many successful investors know that just looking at what you made is not the end of the story. You need to also look at what you get to keep after paying taxes. So there's many tax-efficient investment vehicles out there that you could use in order to achieve your savings objective. For example, there's investments that have tax benefits with the likes of your retirement annuities, with the likes of your tax-free savings accounts, amongst others. If you look at your retirement annuity, the contributions that you make towards your retirement funds are tax deductible. With the likes of your tax-free savings account, there's no capital gains tax, there's no income tax, there's no dividends tax. So Shafiq, these tax-efficient investment vehicles provide an investor with a potential higher after-tax returns. So it's very important for you to discuss with a qualified professional financial advisor the different types of investment vehicles that you can use in order to achieve your savings objective.
Okay, just picking up where Masud left off with all the tax benefits, you also mentioned something about needs and wants. Now, how does this weave into the tapestry of being a successful investor? And I think I've heard the word super saver.
Yes, so when a successful investor looks at their needs and their wants, they're looking at what are their goals, their short-term goals, their medium-term goals, their long-term goals. So, for example, Shafiq, a short-term goal is you're going to want to be saving for a car, for example. A medium-term goal, you could be planning to either you're going to be studying soon, or you're going to be, getting engaged, or something that you want to be able to plan for in about 2 to 3 years' time. And then most importantly, a super saver, as I said, is someone that is thinking of that long-term goal, ultimately for retirement. Now, I know that Masud had alluded to those tax benefits that you can get in your retirement age if you are saving now already for retirement, but you can also get those types of benefits with your tax-free savings products as well, which Masud had touched on.
Yes, Shafiq, just to add on what Sherazaan said, the tax-free savings account essentially supplements your retirement savings. So what the government has done is they're encouraging people to save. So what they're telling people is that you can contribute 33,000 per year towards your tax-free savings account and have a lifetime limit of 500,000. But the nice thing about it, as I mentioned earlier, the growth within your tax-free, the growth within the product is tax-free. So just as Sherazaan mentioned, the short, medium and long-term goals, whatever your savings objective are, firstly, you need a clear financial plan, and you need a plan in place in order to achieve those goals. And at Oasis, we feel that we've got a complete product offering that caters for every need that you may have.
Interesting stuff. Now, Sherazaan, could you give us some final comments on this whole landscape of being a successful saver and ultimately a successful investor?
So, Shafiq, if we look at, and if we could just touch on what Masud said earlier on the fourth industrial revolution, digital technology, mothers, fathers, kids, as well as millennials out there, what are they doing? They're sitting on their cell phones. They're being exposed to social media.
They're watching us on cell phones.
Exactly. And what social media does, Shafiq, is it actually can expose people to false ploys out there. So you might be lured into buying certain things that you don't actually want or that you don't need. Like I mentioned earlier, you go shopping, you see things, you want things, you need to be exercising self-discipline. And alhamdulillah, if we could use this blessed month to instill good investing habits. If you have been, spending unnecessarily, this is a good time to tell yourself, you know what? And I know Masud mentioned about there's no such thing as a free lunch. I know it's Ramadan, but also...
there's no lunch.
Yes. So what does this essentially mean? It means that you need to be taking... You can't just sit back and expect things are going to happen. You need to be able to take action, instill those good habits. We spoke about planning, speak to a financial advisor, educate yourself, gain the knowledge, have patience, know that everything that you want to achieve comes with the correct patience to be able to benefit on those long-term returns. And importantly, control your emotions in the malls. If you are on social media, I know we spoke about it in the break, it can be used in a very efficient manner. Don't fall foul to the false, get rich quick schemes out there, or those miracle remedies that some of the millennials are falling prey to. You need to be able to tell yourself, I want to be that successful investor. I'm going to contact a financial advisor. I'm going to be able to have them take my hand through this stage to be able to have a successful financial journey in many years to come, inshallah.
Guys, thanks a lot. And you have been watching the Oasis Focus on Finance show. A special thanks to our guests, Masud Harneker and Sherazaan Isaacs, in which we were discussing the characteristics of a successful investor. Should you wish to call us, you can dial 0860 100 786 or email info@oasiscrescent.com. And of course, should you wish to watch this or any of our other shows, you can log into the Oasis Crescent YouTube channel, or you can catch us on LinkedIn. From myself, Shafiq Morton, until next time, Assalamu alaikum wa rahmatullahi wa barakatuh.